here. If you haven't joined one of my presentations before, my name's Charlie Ogden. I've been working with SCORE for since the beginning of 2021, I believe. So, a little over 4 years now, and I've always been helping with the mentors. So if you've got a mentor at this point, and you have any banking or finance related questions, they'll loop in me, or I think there's a few other folks that are in the banking industry. So you may have talked to someone else, but I've been doing these classes for a couple of years now, and I do this one that talks about just banking in general and kind of what you can expect and what to prepare for if you're getting ready to talk to a banker. And then also I do a lending class. It talks about just different sources of financing and also kind of what to expect, good questions to ask when you're if that's something that you're looking for in your business. So that one will be next month. So I'll just kind of alternate. I'll do this one month and then the lending one the next month. Um, but I love SCORE. SCORE is a great institution, a great resource too for a lot of folks. And in my capacity as a subject matter expert, I'll kind of give you general banking information. I'm not going to go specific with my bank, which is First Citizens Bank. You can see on here, but I've worked at a few different banks, so I'll just kind of go through generally what to expect. But if you have specific questions, like I said, we'll have plenty of time to talk through that. And even if it's not part of this material. But I hope this is helpful. And a little bit about me. I'm from Texas originally, moved to Nashville in 2013. Typically I'm in the office every day, but I'm actually working from home today. So you can see our little uh, kids playroom slash homeschool room that my wife teaches them in. But um, we live in Mount Juliet. I started out in banking at a smaller bank and kind of on the personal side and did doing like, checking accounts, credit cards, mortgages, things like that. And then kind of really gravitated towards the business side. And so I've kind of moved up and went from that, personal banking to small businesses to now work with kind of medium-sized commercial businesses on the lending side. But since I've done a few different things, I feel like it's given me a pretty good perspective on kind of the entire financial picture for a person in a business. So hopefully, if you have any questions, I can help. But if not, I can at least get you pointed in the right direction. Um, but we will get started right now. So we're talking about what your bank offers. Get this out of the way. So I think the reason I put this first, I think the most important thing is to know your banker, especially on the business side. Personal banking, there can be some complexities to it, but really it's pretty straightforward. Checking account, credit card, mortgages, savings account, things like that. The business, there's a lot more to it. And if it's something you've never done or grew up knowing how to do, it can be a little bit daunting maybe. So I would talk to, if you have a good relationship with a bank right now, if talk to their business banker. Most banks of any size will have a dedicated business or commercial banker that you can talk to. And it really doesn't matter if your business is fully established or it's just something that's kind of you're thinking through and you haven't even really started it yet. Because they can kind of help guide you. And also the thing you want to figure out pretty early on is if you are going to need some kind of lending in whether now or in the future for, you're trying to buy some equipment or if buying a building or whatever it may be, you want to figure out if that bank's going to be a good fit. And we'll talk about this a little bit later too, but every bank that's, I would say lending on the commercial side is where banks really differentiate themselves on what they want to do. Because banks will have charters that they have to keep updated, and they basically will list which industries they prefer to lend to and which industries they're a little bit more cautioned about. Like restaurants is one that we see as a good example. Some banks really like restaurants and hospitality, and other banks just don't. They'll do it, but it's very limited. There's more restrictions. Same thing with like construction. Construction, without getting too much in the weeds, has a lot of liens and things that you can have from subcontractors and things. So that it can be a complicated industry to lend to. So if that's something you're in, you want to ask them early on, hey, is this something that I could, now or in the future, you guys can help me with? If not, maybe you want to look somewhere else to start that relationship because it matters how long you've been with that bank. Even if you just have a checking account with them, it makes a difference when you do come and ask for lending and different things because they can say, oh, you've been with us for a year, 2 years. We've got a relationship and you can still get loans if you're new to the bank, but it just can help. So that's why I say it's important to start that relationship and just ask those questions early. And like I said, every bank will lend on the commercial side, but there's just certain industries that can be a little bit trickier. So you just want to ask those questions early on. So that's why I say, always kind of build that relationship with your banker and go from there. So a few myths about banks. Banks don't want my business because I'm too small. It's absolutely a myth. Every bank wants business clients. I mean, small business employ the vast majority of the United States workforce, and they drive bank profitability, candidly. So every bank will have a lot of times I'll have different bankers for different levels, and that's kind of how I came up through the ranks, I guess you could say. But um, so like banks will have, potentially a small business banker where they'll work with like startups or businesses that are under a certain revenue size. Like say you're making, less than 500,000, they may put you with this person. And then as you grow, you may move up and your needs get more complex. You may move up to a business commercial banker and things like that. So no, absolutely. Every bank wants your business. It's just figuring out kind of which is going to be the best fit. Um, Excuse me, another myth is that banks don't make small loans. Absolutely not true. Banks don't typically have a minimum. Sometimes if the loan is, a few $1,000s, they may do something else like a credit line or something instead. But no, banks love small loans, especially helping you get started, because then they can kind of be with you as you grow and your needs get more complex. They want to be the resource that helps you for that. So, um, also, you don't need a perfect credit history. So we'll talk about this, and I really go into this in my lending class. But banks on the commercial side, we look at your personal credit score, especially if the business is new or newer, less than a couple years old. But it becomes less important the stronger your business becomes, if that makes sense. So we're really on my side. If I'm looking at a business, say you've been around 5 years, and I'm looking at how does the business cash flow every month? Because ultimately, in a simplistic way, we're looking at, all right, this is how much every month your business makes, and you take out all your expenses. This is how much you have left over. Can you afford to make this monthly loan payment? That's very basic way of kind of what we're looking at. So that's the most important thing for us. We do pull personal credit on a lot of these requests, but it becomes less and less of even if, ideally you won't have like a bankruptcy or things like that. But even that, if there's a story there and something and the business is performing really well, we can usually find a way to make that work. So, but when you are getting started, a lot of times personal credit will be leveraged a little bit more because the business just doesn't have that history. So you don't need perfect credit, but you still need to have decent credit. Say if you need to go out and get the businesses early on and you need to, buy a truck or you need a small line of credit to lease a space or something like that. You want that personal credit will play a role, but just know that kind of it doesn't forever, if that's helpful. Loan applications don't take months, especially what we call conventional bank lending, which is what I do. We can have non-real estate loans we can have done in less than a week. Real estate loans take a little bit longer because you have appraisals and things you have to do, just like if you're buying a house. But no, we can have those done pretty quickly. SBA loans, which we'll talk about as well, do take a little bit longer, but it's not something that takes more than a couple of months on the SBA side. So but all that to say, if lending is part of the reason that you're, in this class or you're looking to talk to a bank, I would start talking to them before. If it's something you see kind of on the horizon, go and let them know now and kind of plan that out. And that way you're ready when the time comes. And last one, fees are not affordable. No, every bank does charge fees for different services, just like on the personal side and loans and things like that. But they're typically affordable, especially if it's something that you're using to improve your business. The whole goal is to make sure that if you're buying a piece of equipment, it's going to allow you to make that much more money every month. You never want to do something that's going to cause you to make less money, obviously. So there are fees, but typically it's justifiable because it's going to help you make X more, every month. So. Um, any initial questions? And I hope y'all can hear me okay. I'm not on my normal microphone. Cal, can y'all coming through? Well, okay. Let me pull up the chat just to make sure. Can I have this off to the side so we don't have any questions? Okay, Xavier, I just saw your question. Do banks have just one person you can talk to? Xavier's asking. Maybe it depends on the bank. So if it's a smaller, like a community bank, they may have just one or two people that do, business type lending and relationships. So maybe, but if it's a medium, and when I say medium, I'm thinking, like even a Pinnacle and up, which Pinnacle's getting a little bit bigger lately, but and that size bank, and then obviously the big ones, they will have multiple people, and they really start to divide it based on revenue size, and things like that. So if you're to answer your question, yeah, if it's a small bank, they may only have one or two people, but banks of medium to large size will have multiple folks, and they'll usually have somebody at every single branch that does some kind of business. But if you've got a relationship with a personal banker, you can ask them, especially if somebody you trust, like just let them know what you want to do, and they can hopefully point you in the right direction. All right. And feel free, like I said, keep asking questions, and I'll keep pausing for questions as well if you want to come on unmute. Um, so this just goes through if you're depending on where you're at, you may already have set up what kind of business entity you want to have. But if not, this just gives a very, very high level look at the different options. And this is something you absolutely want to discuss with your CPA, and you can, just do your own personal research. But this just gives you something to look at. And your score mentor might have talked with you on these too, but this is definitely the person you want to get kind of the final confirmation from is your CPA. But most people have heard of a sole proprietor. So that's where a lot of our businesses start, especially if it's something where it's just you're kind of getting it up and running, but you want to go and have it registered where you can kind of separate your business. Say you just want to have a separate business account for, tax purposes, and you want to be able to track that separately. This is a great way to start. It's extremely inexpensive. It's very, it's cheap. It's something you don't have to continually pay for like you do with these others, on an annual basis. And it's a great way to get started. And so a lot of people, I think it's a great way to start. And one thing I want to clarify too is you don't have to, say you want to be an LLC in the future, you can see that you need that liability protection, but you don't want to pay for it yet and go through all the process of getting that filed. You can start as a sole proprietor, and banks will give you credit for that, what we call history. So say you start as a sole proprietor, now, and then a year from now you want to convert to an LLC, and maybe you have a new name. As long as you can show, yes, I have been around a year, and you've got all that filed, we're not going to say, oh, it's a brand new company just because you just filed the LLC. Like we'll be able to show, oh, you've been around a year, you just changed the name. So it's important to, keep records of all that, because banks will look at, number one, yet how long has the company actually been around? And just because you change your name will still, and you just want to let your bank know that, like, yes, I just filed the LLC or the S corp or whatever it is, but I've been doing this for so long. Here's the record of my, monthly cash flow and things like that. But as we're going through, LLC is probably the most common, especially for smaller businesses, small to medium. The whole point is just to separate the assets from your personal assets from the assets of the business. So if you're in any kind of business where you could potentially get sued, that's what it comes down to, is you want to have that liability protection. Like say you're, a roof company, you're starting a smaller roof company, and you have guys that are working for you, or you're doing it, and one of your guys falls off a roof and gets hurt, and his insurance wants to sue the company, or you get in this whole battle of insurance. They can't then come after you personally. They can try to come after the business assets, like maybe you've got trucks or equipment, but they can't come after your personal house, like that kind of thing. So that's why, if it's something where you're doing some kind of consulting, or you don't see any sort of liability there, then you may not need it. But it's pretty common. It's still not super expensive. It is something you have to pay for annually with the Tennessee Secretary of State, and you have to go in and register. But it's not very expensive, and it does give you some of those protections. And I will say this, you can pay folks to go online and set up you go to the IRS to set up to get yourself an EIN number, which is essentially like a social security number for your business. But that's free to do, and you can go on the website yourself and do it. If it seems daunting or you don't want to fool with it, you can pay somebody to do it. But that part is free. And then there is, I think it's a few $100s to file your LLC with the Tennessee Secretary of State, but you can do that yourself as well. You just have to have the name. You want to have the EIN number already done with the IRS. And like I said, it's not as bad as it may sound. I mean, if it's something you've never done and you'd rather have somebody pay for it, or you'd rather pay somebody to do it, totally get that. But just to save yourself some money, if you want to try to do it yourself, it's really not that bad. Um, the other benefit is, for an LLC, is your taxes are paid at the personal income tax rate, which is significantly lower than the corporate tax rate, um, which kind of rolls into what's called an S corp. So an S corporation is the same idea. It's just for if you have, usually you'll see an S corp if you have multiple owners or you have shareholders and but you still want to pay out that personal rate. So basically, all the profits are distributed from the corporate level down to the shareholders. And so you're able to you still pay your taxes, but you pay them at the personal rate. So whatever your personal tax bracket is. So it saves a little bit of money on taxes. C Corp is what you see, larger companies like Walmart, for example. All those are C Corps. Um, Basically, there's no like the owners themselves get income as W-2 wages, as it says here. So you get the company pays taxes, the corporate tax rate, and then everybody gets paid and they pay their own taxes. And just like, like I work for the bank. The bank is a C Corp. The bank pays their own taxes, and then I pay, my taxes as a W-2 employee. Some of these less common are, general partnerships. That would be a lot of times you'll see that for maybe somebody owns real estate or different things like that. And then an LLP, these are professional. So like doctors, a lot of times are LLPs or, certain high liability type things. If, and like I said, just really, I don't want to get too much in the weeds on these, but really talk to your CPA and they'll kind of guide you. Any questions on any of this? I know it's a lot, but um, any initial questions on this stuff? All right. If y'all just heard 2 seconds, y'all, I just heard a kiddo crash back here. I think she's okay. All right. Sorry about that. Might just okay. I think we're good. Sorry about that, y'all. All right. So rolling into banking services here. Oh, I just saw Xavier had a question. How does registering a business in a state work if you're a military spouse? Tell me, Xavier, do you mind coming off or coming unmute or just, I'm trying to understand your question. Can you explain a little bit what you're,
Yes, so I'm a military spouse. So when I first started my digital ad agency, I started in North Carolina. So I've been registering it. I just keep paying the registration fees for that area. But um, now that I'm in Tennessee, I'm using Tennessee's resources, and
yeah.
I'm trying to make sure that I'm able to participate in things because my business is in North Carolina. So I'm just trying to understand that how does it work if I'm, banking with services out with all these different companies and organizations, but they're in different states. So I'm just trying to understand, making sure I'm following the right steps.
Yeah, I mean, I would talk to your CPA to clarify, but typically, because you see that a lot where companies will be registered in different states because different states, like Delaware is a big one, Montana's becoming a big one where they'll register in those states because they have certain tax benefits. Tennessee has pretty good tax benefits as well, but generally, my understanding is any state that you do business in, so if you make money from in that state, then you need to register in that state. And that's more or less just to make sure you're not taking money from one state essentially and paying taxes in another. Um, and so what'll happen is people that register in Delaware, they'll register as I think it's called a foreign agent, and they don't mean foreign like you're from another country, but it's just another state. I believe that's what it's called. And your CPA will probably tell me I'm crazy, but I think that that's what it's called. And it's basically a way for you to still stay registered in North Carolina or wherever you need to be, and then basically make sure that you're covered in Tennessee as well. But I believe it all tracks back to where you actually where are you making money. So if you're living in North Carolina and you're making money in North Carolina, or even if you were living here but your business is based in North Carolina and that's where you're making money, I believe you would be fine to kind of go as you're going. But like I said, because we've got companies that are based in here, but they do operations in like Texas and Florida, and so they have to register with the Secretary of State in those different states. But does that make sense?
Yes.
Okay, I believe that's correct, but some of that stuff changes, and I know a little bit, but I'm not an expert on that. So definitely double check with your CPA and confirm.
Okay.
All right, any other questions before we go into banking services? All right, we'll keep rolling here. So a few things we're going to talk about today, and these are all things you probably heard of. But This is what most 99% of banks will offer is some sort of checking accounts, and there's usually different ones for businesses. Obviously, debit cards, savings, business credit cards, merchant services. That's how you get paid. So that's like a little square reader. That's what merchant services is. Online remote services, online banking, fraud protection, money movement, sending wires and receiving wires and ACHs, and then obviously loans and lines of credit. All right, so we talked about this a little bit, but things to consider. This is kind of, if you've already talked to your banker, you may have already had these conversations, but if you're getting ready to, this is stuff you kind of want to think through and have a plan for. What banking services do you need? Obviously, everybody needs some sort of business checking account. Um, you obviously a card, a way to access that. You may need checks depending on the type of business you're in, and then obviously kind of what you're going to need in the future. That's where I was mentioning go ahead and talk to him. If you know it's, you may not need it now, but in the next couple of years, you say, hey, I may need a loan to, maybe I do need to buy a building. I need a bigger space, or I will need a line of credit to operate my business. Go ahead and talk to him about that, like what that looks like, how you need to, kind of be moving towards that. Um, Excuse me. The big one is how do my customers pay me? That's the merchant services. Obviously, the vast majority of businesses now, our customers now, want to pay with a card for a lot of things to get their rewards. So you want to get some sort of way to take that so you can stay competitive. Um, if you have employees, how are you going to pay them? Are you going to write them a check, or do you want to set up some sort of payroll system? And then how you pay your vendors, that's who supplies you. Like if you're somebody that makes something, or you're in the service, you're an electrician and you need to buy electrical components, how are you going to pay those vendors? Um, Also, location. When you're choosing a bank, if you're in a cash heavy business, like you're in sort of some sort of retail business where you take a lot of cash, you may need to be close to the bank. But you may not. You may be up, and a lot of businesses are. They don't necessarily need to go into the bank at all. So location would be less important. And then maybe that's where you want to just figure out which bank is the best for you, so you really can choose from any of them. Services online, every bank has some kind of online. Some are definitely more robust than others. Mobile deposit, that's being able to obviously, take pictures of checks from your phone. And then, we kind of talked about this relationship. If you've already got the relationship and you got somebody you trust, great. If not, now's the time to start building that. And so business checking and saving. So business checking is a little bit different than personal. A lot of banks will have like a free or a personal checking account as long as you have your direct deposit or you keep certain balances. It's free. Businesses are a little bit different. They'll offer a free, most banks will offer a free business checking account, but it's instead of having to have your direct deposit or something coming in, there's limits on transactions. So typically the way it works is like, for example, for the free checking account, there's no um, balance requirements because they know you're probably just getting started. So you don't have to keep a certain amount in there, but you can only do 100 transactions a month. So if you know, like, hey, I'm, and that transaction is money moving in or out. So if you're swiping the debit card every time you do that or making a deposit, those are all transactions. So you got to think if you're in a business where you don't get a ton of transactions, it's perfect, But if you're in one where like a retail is another good example, or a food truck or something like that, where you got a lot of money moving in and out every day, you may need to look at the next tier up because yeah, they'll give you that free 100 transactions, but then after that, they start charging per transaction and it can get to be pretty pricey. So another thing you definitely want to ask your bank about and kind of plan for that. The good news is usually what they can do is maybe you start in the business checking and then as you grow or your business becomes more complex, you can move up and they don't have to change the account number. They can just kind of toggle it and move that up. And so that's where you get to the package checking. Um, Typically there are requirements in the package checking what maybe you have to have your merchant services through the bank or you have to keep a certain balances, but it allows for more transactions. And then analyzed checking is going to be typically you have to keep balances, pretty significant balances in the account. This is what we see with a lot of manufacturers and companies that keep big balances because they've got a lot of money moving in through ACH and moving out to pay vendors and employees. Typically, it's at least 500,000 in an analyzed checking account, 500,000 to make it make sense. Um, if you're at that point, that's definitely something to talk to them about because there's definitely a lot of nuance there and complexity. So, but if you're just getting started out, typically the free or the kind of tier two checking is going to be where you're going to be at. Um, like I said, talk to your banker. This all starts with talking to your bank. You definitely want to do have a business savings of some kind, even if it's just for taxes, putting money aside for taxes every time you complete a job or you do a sale, you put a percentage over there, and then that way your taxes at the end of the year aren't, you know, a hit a blinding a hit to you, where you got to scramble for that. And then overdraft protection is great. Same kind of deal as what you have on the personal side. If you can link your checking account to your savings or a credit card, that'll cover that in the event that you overdraft. All right, merchant services. So this is Square. Like I said before, this is Square's kind of the most famous one, but there are I don't know how many. There are tons of companies that are in the merchant services space. And as you start your business, or if you've already started, you probably get calls or visits from these folks because um, it's a highly competitive space. And what's interesting is they've done a good job of kind of figuring out, like, the big companies have said, all right, we're gonna really focus on this space. So like Toast is a good example. So if you're in the restaurant industry, Toast is about as good as it gets. Um, they're from what I've seen, their pricing is very built around the restaurant industry, and their point of sale system, POS system, where you go in and you put in orders. It's really nice. And so if that's something you're doing, I would start with them. But a lot of times, if your bank is one of the big ones, like Bank of America or Wells or Chase, they a lot of times own their own merchant services through the bank, and so you can get special discounts on that to have your checking account there and your merchant services with them. Um, but smaller banks typically will partner with a Square or whoever, and do that. And so just something you want to talk to them about, see kind of just you can get a quote and say, hey, it looks like I'll get 5,000 a month on average from credit card. See what your bank can do, and then yeah, talk to Square, talk to some of these other folks, and figure out how much, if you do need a full like POS terminal like you see at a restaurant, or do you just need the little thing you can plug into your phone. Um, because the pricing, because you typically have to pay for those, but sometimes you can get discounts going through your bank versus going through Square. Um, any questions on merchant services while we're here? All right, keep rolling. All right, account management. This is another big difference between business and personal accounts. So on your personal account, I believe you have 60 days to where if you get your statement, or if you're checking online and you see some kind of fraud on your personal checking account or your credit card, you have 60 days to go in and dispute that with the bank. It's different. On business accounts, you have 1 day. So you need to check that daily. So just get on there and check and see if anything's happened, because there's just a whole different set of guidelines and rules for business accounts. So that's why we always say monitor your account daily. Just get on there and check. Fraud is still the number one way people are losing money. So I always tell people, check it every day, set up alerts. So if you can see money coming out, make sure that's you and not some sort of scam. And then obviously fraud is like I said, the biggest thing in all these examples here. Just like with your personal stuff, just be careful. Anything, don't sign up for stuff unless you know what it is, all that stuff. So, and you can get a lot of banks. I know ours is one, and most banks now have some sort of fraud protection you can get on there, especially if you're writing a lot of checks. Like, say you do have employees and you send them out checks, there's special software that banks have that you can put in there and say, all right, today I wrote these 5 checks for these amounts. And that way, if somebody tries to intercept one of those checks, or they get your information and they write a different check, it'll pop up and block that. Um, checks are every day becoming less and less common, so you may not need that. And if you're not doing any sort of checks, then obviously you don't need to worry about it. But checks are becoming less common because they're still the most dangerous way to pay somebody, because it has all your info. It's got your checking account, your name, your address. It's got everything on there. And you give somebody a check and it doesn't just stop there. There's probably 10 different people that they'll end up touching that check, from the person to the bank to the back office. So, but you still need it for certain things. So, just protect yourself. All right, preparing for a business loan. Like I said, if this is something that is on the horizon, sooner rather than later for you, I do that class. It'll be, I think, towards the end of next month. And I'm happy to answer questions too on this as well. But business lending is typically, a big thing that people are looking for, and this is where you see a lot of complexity. So you want to make sure that you kind of know, and your score mentor can help with this as well. But understanding your personal credit, like I said, business credit and personal credit are two different things, and that's why when you set up, I mentioned the IRS EIN number, the Social Security number for your business, you want to start building that up too. So that's why it's good to, as you're getting started, if you say you get a business credit card for expenses, make sure that that's tagged under your business's credit score. A lot of times they'll still use yours if it's new, but you're essentially a guarantor, meaning the business is the borrower, the business is the main, and they put you on there. Basically, it's if in the event that the business doesn't pay the credit card back, they can come after you personally. But that's why it's done like that. But it does help to start building the business credit and showing that when you're going to get a bigger loan, that you've already kind of established that. And obviously, uh, t telling your story, that's a big thing, especially early on. Your personal experience in whatever business it is. Maybe you've done this before in a different capacity, and now you're starting your own, or you're buying a franchise or something. Being able to tell that story, and then business plan, financial data, all that good stuff. And like I said, make an appointment with the bank, and hopefully you're getting ready to talk to, or you've already talked to the banker you want to work with. Um, Financing sources by stage of business is actually the title of that other class I teach, and we really go into this, but it just talks about kind of what's available to you depending on where you're at in your business cycle. So if you start up, that means you haven't quite started yet, or you've just started the business. Typically, you're going to have what we see is personal savings is pretty common. People will, especially if you don't need a lot of capital at the beginning, you can use your personal savings. Family and friends. Crowdfunding is becoming more and more popular. That's like a Kickstarter or a GoFundMe. Um, Peer-to-peer lending in online lending is great, but you just want to be really careful with that stuff. Just like anything online, there are things that sound better than they actually are, and not all loans and money are created equal. So if somebody's just beating down your door to give you money, especially if you're early on, just be careful, because sometimes the rates and the fees can end up being hard to deal with and put you in a worse spot than you would have been. And that kind of goes in the loan marketplace and fintech, kind of right here in the middle. Just be careful. Like I said, if it is harder to get a loan when you're getting started, and if somebody's very eagerly, or some companies very eagerly trying to give you some money, just be careful and talk to your banker. See, is this a good deal? Is this something that's going to put me in a bad spot? Angel investors, venture capital, that's kind of like the Shark Tank idea of um, getting an investor where instead of getting a loan, they're actually giving you money and getting a piece of your business. So you may give them 20% of your business for $100,000, but now you're locked in with that person. So you want to make sure that that's somebody that is actually giving you a benefit, and somebody you want to, because they'll be calling you wanting to know how the business is doing and when they're going to get their money and all this stuff. So um, just be careful with that. And there are good organizations in Nashville. I think what is it called? I think it's called the Nashville Entrepreneur Center, or maybe just the Entrepreneur Center. They're great with this stuff. They actually can help partner you with local investors. And I think they do a pretty good job. I haven't worked with them nearly as much as I have with Score, but I think they do a pretty good job of kind of vetting those investors to make sure that they're not trying to take advantage of people that are starting businesses. So that's a good one to talk to if you anticipate needing, some investor funds early on. Community development financial institutions. So those are called CDFIs is the acronym. What they are is a lot of times they're nonprofits that have kind of been built up to serve specific either geographies or specific demographics. Like there's one in Nashville called Pathway Lending, and they're great. I've sent them, a ton of folks that are getting started, and they a lot of times they'll have special programs, and usually they get money from the government and different grants and things, and it'll say, all right, we're distributing the U.S. government's distributing out all this money for different small businesses, and they're like, all right, Tennessee, we want y'all to take care of distributing it out, set up whatever parameters you want, and so then it kind of funnels down to these CDFIs, and some of them will be servicing, like minority-owned businesses or women-owned or veteran-owned, and that's kind of their target. Or some of them will work with businesses in certain like rural zip codes. If you're bringing, you're starting a business in a more rural area and you're bringing jobs out there, that's kind of what they're looking for. So, like I said, Pathway is a great one, and you can connect with them, and they can kind of help you figure out kind of, what to do and if you're a good fit. And then you see down here, banks and credit unions kind of start and what we say the maturing. So that line right there is really 2 years. If your business has been around less than 2 years, then typically we're going to say you're either startup or early stage. And then 2 years and after is when you're kind of eligible for bank and credit union financing for the most part. And the reason that does take longer is because banks and credit unions, the rates are usually a little bit better than some of these other places, but because the rates are better, they don't want to take as high of a risk. Whereas you do some of these other places, like these loan marketplaces, they'll help you earlier on, but the rates are higher because they're willing to take it what we call consider a riskier business because you haven't been around as long. Any questions while we're on this one? All right. Like I said, I get more in depth with this on my lending class, but just from a high level perspective, if you're working with Score, that they'll help you with a lot of this stuff already. But just knowing your numbers, if you haven't started yet, you may not know this stuff, but if you've been around at least for a few months, you should have, an idea of what your revenue is. So your revenue is basically everything you're bringing in. If you're in some kind of retail, it's all right, how much did I bring in, for this time period? It may be this month. And then expenses will be below that. So you pay for, fuel and different things like that. And a lot of that goes under your cost of goods sold as well, but that takes out all that stuff. And then basically that net income is what you've got left over. And that's a lot of times what we're going to look at to see on a lending perspective, what you can qualify for. Um, and what's good now about all the AI stuff is you can go online and talk to ChatGPT or whoever and say, "Hey, can you compare my numbers to these other industry these or my peers in the industry? I've been around for this long. Like, how am I doing? What should I be looking for?" And it can just spit out all that stuff. It's great. Um, and then trends are a big one we look at, especially if your company's been around for 3, 4, 5 or more years. We want to see are your trends going up? Are you doing better? Or if they're going down? And a lot of times, if they're going down, it may make it harder to get a loan unless there's a reason. Like maybe COVID obviously was one that impacted everybody. We almost just kind of throw those numbers out because we're not going to punish people for what happened during that, and we're kind of far removed from that now. But trending is important, trending in the right direction, showing that you're doing a little bit better every year. Um, what's driving your numbers? If you're able to speak to that to a banker or to the SBA, if you're looking at an SBA loan, um, that's a big deal because you're able to project out like, all right, if I get this loan, here's what I'm going to do with it, and here's how it's going to help me. I'm going to be able to hire more people or buy this piece of equipment, which is going to help me do these things. So, and then obviously tariffs is one that we're still kind of seeing how the dust settles. It seems like it's changing every day. But if you're in an industry that is or will be impacted, that's something to kind of think about. Like if you buy aluminum from Europe, that's one that you may want to budget a little bit more for how that's going to cost. But we still, that's still one that we're still figuring it out. Obviously on the economic level. Um, Balance sheet. So there's three, but there's two major financial forms that you'll kind of run through, and that's your income statement, which is the one we just look at, and that just shows your business over a certain amount of time. So it could be 1 month, it could be a year, 6 months, whatever it is. A balance sheet is just a snapshot of a specific day, and a lot of times we'll get, all right, let me see your year-end your year-end income statement or profit and loss. That's the same thing. For the whole year, last year, however long you were around, and then let me also get your balance sheet for the end of the year. Just how did you finish up? Balance sheet, sometimes we'll want different ones for different months because since it is a snapshot, one may show, you've got $50,000 in the bank, and then the next week may show you've got 10,000 just because you've got money moving in and out, and it's just a snapshot. But it does let the bank see, okay, how much are you keeping in cash? How many assets do you have versus how many liabilities? If that number's kind of inverted where you've got a lot more liabilities, it can make it hard to lend more. But it just gives the bank a snapshot of and the more things you have, kind of as you add equipment or um, accounts payable, accounts receivable, things like that, you'll add line items to this. But this just gives you a general look at what that looks like. We'll go through here. Oh, Xavier, I just saw your question. Do they have this as a template? Were you asking about the presentation itself or these financial statements? Xavier, you're on mute if you're
Charlie, I answered her. I didn't share my answer with everybody. I answered her.
Yeah, yeah, he did.
She's P&Ls.
Okay. Okay. So business loan types. This is, like I said, very high level, but um, really it comes down to when you're looking at a loan, is it for short term or long term? And what are you buying or what are you needing it for? Term loans, that's like, when you buy a car, that's considered a term loan. You have a fixed payment every month and it's for, 6 years, 7 years, whatever it is. And you just make the same payment. You can pay extra, but your required payment is the same every month. Um, Unsecured loans, that means secured versus unsecured just means is there collateral versus isn't there. Unsecured loans are harder to get. Your business has to be doing pretty well because that essentially means the bank doesn't have any collateral. Um, and usually they're a shorter term. So if you want a $20,000 unsecured loan, usually you're going to only be able to get that for a couple of years, up to 5 at the most. But if you're buying equipment or what we call fixed assets, where there's actually a tangible value there, you can get usually longer. We can go up to 10 years on some types of equipment, and they'll look at, you know, what's the useful life of the equipment? Is it something that like you're going to have to replace, you're in an industry where the equipment changes pretty often. You may not want to do a 7 year. You may want to pay that off quicker, because in 3 years I'm going to need to upgrade because of whatever industry I'm in. Um, and then real estate secure loans, we can go up to 20, sometimes 25 years on a real estate loan, just because real estate, just like when you're buying a house, you typically will get a 25 or 30 year on a lot of those because the value there is a lot more tangible and it doesn't lose value like equipment does. On the other side, so those are considered term loans that usually you're going to pay off in a year or longer. It's going to take you that long to pay it off. Lines of credit are for needs that are usually quick and stuff that you're going to pay off in less than 12 months. So lines of credit are usually on the business side, they usually are interest only. You do want to pay more than that, but really lines of credit, the way I look at it is like if you're in an industry where you're paying, you're buying whatever you're buying, whether it like in the restaurant, you're buying food, but you're going to get paid quickly because you're buying food and you're usually going to get paid within a week at the most, from clients coming in and people visiting the restaurant. Or same thing if you're in like a HVAC or electrician, you're buying stuff and you're getting paid quickly. That's what these are for because you want to pay out. That the rates are higher on lines of credit, but what's good about them is if you get a $50,000 line of credit, just like a HELOC on your house, you pay that up, you run it up to 30,000 and then you pay it off. You've got that full 50 available again. And you may not use it every month, but it's good to have. Or if like we said, you're buying raw materials like aluminum and you need to buy a bunch of it, like prices have dropped, you want to buy a bulk but you're going to pay that off pretty quickly in a couple of months. Lines of credit are great for that. And like I said, as your company grows, you may use both. You may use term loans and lines of credit. Any questions on this stuff? All right. So this just goes a little bit more in detail. Commercial loans, obviously, we're using those for real estate. We do a lot of construction loans, expansion, things like that. Credit lines, like I said, this is more for if you're in an industry where you need to pay employees, but you're not getting paid right away. Like maybe you get paid every 30 days, but you need to pay your employees every 2 weeks. This allows you to pay them, and then when you get paid from your customers, you pay that off. Equipment finance, it's pretty self-explanatory. Um, SBA loans, SBA is great. It serves a great function. And like I said, the rates are a little bit higher on SBA loans, but they can usually lend in a capacity that, in conjunction with a bank, but maybe you're still new, you've only been around a year and you need an SBA loan, or you're doing something where you're not quite to the point where you can get what's called a conventional commercial bank loan. SBA is great for that. Agricultural lending, these are kind of more specialized type stuff. And municipal lending, that's lending to a city or to a county or things like that. And then obviously credit cards are great. And I always recommend getting those early, and that way you can start building your business credit. That's it. I will send this out to the SCORE folks for them to distribute. And this is my contact information as well if you have specific questions. But we've got, about 13 minutes left. Feel free to unmute if you have any questions about what we talked about or just banking in general or lending. I'm happy to talk through that.
I do have a question.
Sure.
What's the easiest way to start building business credit from just like the smallest thing you can think of?
A business credit card. Typically, they're considered the lowest risk from a bank's perspective, so they're the easiest to get. If your business is, newer, they're going to lean, like I said, more heavily on your personal credit score. And so what happens? And I would say 90% of business loans, even for well-established businesses, they will still have the owner, what we call personally guarantee. So we pull the owner's credit, and that basically is just it's pretty rare that we don't do that, and it's for usually reserved for larger businesses that have been around for 10 years or more, or they're doing something kind of unique. But what happens is, say you're say you need to buy a truck for your business or a food truck, for example, and it's $50,000. We will pull your personal credit when we initially file the request, and then we'll pull the business's credit. And even the business's credit, it's important, but it's not the number one thing is cash flow. How does your business cash flow? Can your business pay back the loan? So
Yes.
that we're less worried about you, we're worried about the business itself. So we do pull your personal credit then, but then it doesn't say, 2 weeks later, you want to go buy a car under your personal credit just for you. It will show that we pulled your credit, but it won't show that you have a $50,000 loan on your personal credit. That all sits under the business's credit score. So it's not, or like you go to buy a house, they look at what's called your debt to income ratio and they want to see how much debt. That's not going to show up on your debt. So it doesn't hurt you personally other than having your credit pulled, which you don't want to do that too much, but it's not as big of a hit as having a $50,000 work truck on there, So that's why it's good to have put as much stuff under your business as you can because it kind of frees you up personally and doesn't encumber you on the personal side. But to answer your question, yeah, business credit cards are great. They get started. And if you're in an industry where you're going to, like, say you need to buy lumber, or some kind of raw material, a lot of times companies will give you terms, and that's essentially they're extending credit to you. So like, all right, you can buy the lumber today and you need to pay us within 30 days. That is a form of credit that will also show up on your business credit report. It typically won't show up on your personal, but it'll show up. All right, when are you paying these on time? Are you paying early? And on the flip side, it can hurt you if they give you 30 days and you're paying in 45 days. That will also show. So that's another good and relatively easy way to build your business credit if that's something you do. But if you don't, then business credit cards are great and typically easier to get, and it also allows you to start, kind of building credit on the business side.
Do you recommend that we get the credit cards all in one day?
All in one day.
Yeah, for like just say if there's like particular organizations that we shop at, for example, Uline, uh, should we just should we just apply for them all in one day?
As far as like pulling your credit, I guess why you're asking. Unfortunately, there's not a great way to do that. Like I think if you pull it a bunch, either way, you're pulling your credit multiple times, and every time you pull your credit is going to drop your score a little bit. Yes, I think that if you're doing it, say 3 or 4 times, maybe doing it all at once, it's still going to be 3 or 4 pulls. It's not like getting a mortgage where you have a certain amount of time to go get other mortgage,
Hmm.
quotes. It's still going to pull that multiple times. And so it will drop your score. But then again, that only sits on your score for 2 years. So the further away you get from that, um, the less it'll matter. And then it falls off after that. So yeah, I think that's fine. I mean, um, but also, I would, if you're doing it online, like if you're going to their website to apply, read what it says because a lot of times it'll tell you like, we don't do terms for companies that have been around less than a year. So you don't want to apply for that one, and maybe you want to call them and talk to them and see. So I don't want you to just do a bunch of online applications and potentially get denied and still have those credit pulls. So um, just talk to him and see. But I know Lowe's does terms on stuff and places like that, and obviously smaller companies will do that kind of stuff. But you definitely want to have that your IRS EIN number already kind of filed and shown, so you can put that in as and then under the company name. But just research that a little bit because I don't want you to pull your credit a bunch just to get denied and still have those pulls on your report.
Hmm. Thank you.
Yeah. Anybody else? Well, if you think of anything or anything comes up, feel free to message me, and or that's my phone number on there as well, and we can talk. But otherwise, I will. If you haven't joined my lending class, that one we really deep dive in a lot of the stuff we talked about, kind of on the back end of this presentation. But um, that will be next month, and go from there. But I appreciate everybody joining, and best of luck. Hope everything's going well for you. And thank you.
See you, Charlie.